Ladies and gentlemen, a very good morning to you. Welcome to HansaMatrix third quarter 2019 investor conference webinar. Today we are hosted by the CEO of HansaMatrix, Ilmārs Osmanis, and CFO Māris Macievskis. We will start with company's presentation, after which we will proceed with the questions and answers session. If you have any question to the company, please use the question box on the right side of your screen. Ilmār, Māri, I invite you to start the presentation.
Good morning, everyone who joined in early hour. We are starting Q3 and 9-month result presentation webinar of HansaMatrix manufacturing group. We start with a brief executive summary. Business trends, what we are seeing that business have adapted or calmed down to uncertainty that is created by USA and China trade war in brackets and kind of performing as a new norm, which is like a new usual. So we don't see, despite discussions and comments about kind of a European like recession or slowing down, our customers we talk to most of them and they don't share that they are busy and also the forecast for next year show no changes really in behavior in market. Also we're seeing that continuous investments in EU 5G networks. They're not big, but they continue go forward. What actually also positively affects future sales development. In Q3, HansaMatrix continued to supply electronic circuits for 5G network base stations. They already mentioned fact few webinars before that we are experiencing. So far, we experienced quite fast, solid inflation and growth here in Latvia, and amounting to maybe 88% last year, and probably the same figure for this year. It feels that maybe labor market little bit cools down. Maybe we think the next year will not bring as fast growth as its inflation growth as it's observed this year. Q3 summary. We managed to achieve historically highest quarterly turnover, 22% year-to-year growth. EBITDA also proportionally growth from last year to Q3 2019, which also positively influences the trailing 12-month figures. Q3 net profit slightly negative, influenced by higher depreciations. Of course, the cost pressure being already before our EBITDA on wage inflation and our financial costs and losses for investment in other states. The two elements here are growing. Equipment depreciation is growing because we've been investing in quite much new equipment last year. And other point which is in growing is losses from investments in associates. And that's growing not from the fact that losses are growing. Losses are the same and even going down, decreasing, but our share in associates has increased during Q3 and continue with some new share conversions in companies. So figures saw our turnover achieved 6.1, slightly above 6.1 million. EBITDA achieved 0.94, and EBITDA margin, which is probably most interesting, stays above 15.4, and net profitability being 0.028, so slightly below zero. For practical purpose, you can say zero. Trailing 12 months figures. Turnover goes up to 23, above 23.06. EBITDA amounts up to 3.54, and EBITDA margin stays 15.3. and 12-month net profit is slightly negative 0.068. Here we also will see that fourth quarter will. So in last 12 months the worst performance was on last year Q4. So when we will move out of that window, then of course there will be changes here. Also comparing our performance with the peers, we are second highest compared to the same industry company group that we are comparing ourselves. Range and on the top here comes out Income company, which has not only AMS operation but also some furniture business, and with over 15.3 we are on the top, second from the top. The main largest companies on the market like Node, Kitron, Inition, Hansa Holdings, they're performing below 10% EBITDA margins. Also, we have to mention that 15.3. Also, you can compare this to companies like large industrial groups like Siemens, like Philips Healthcare, which are showing figures around 11%. So the margin generally is, I would say, excellent here. Now we are going to Q3 results, which will be presented by Maris Maciejewski. So Maris, floor is yours now.
Thank you, Ilmars. Maris here, CFO of the company. I'll guide you through the detailed results of Q3 and 9 months. So, as Ilmars already mentioned, in the third quarter of this year, the sales amounted to 6.1 million, which is a 22% increase on year-on-year basis and a 2% increase as compared to previous quarter of 2019 to second quarter. This quarter, historically highest company quarterly turnover was achieved. I want to also mention that in October, the profit warning was issued regarding smaller than expected sales in September due to warehouse reorganization in Pārogra. However, third quarter sales results are decent, which is explained by very good performance in July and August. So moving next to sales by region. So the sales are to 3 main regions. Baltic states 41% of total, Nordic countries 22% of total, and other EU countries 31% of total. Services provided to the companies outside EU this quarter were 6%. So this quarter sales to Baltic, other EU countries and increased, but Nordic sales volumes decreased on year-on-year basis. So moving next, sales by sector. Two key sectors are data network products and industrial, with 42 and 38% of total sales. Internet of Things, optics and photonics, and other product sectors are smaller than these two, respectively 9, 6 and 5% of total. And also in this quarter, all the market sectors have increased on year-on-year basis. And then next, the quarterly profitability results. The EBITDA achieved was 942,000, which is 21% up on year-on-year basis. The company operated with small net loss of 28,000, and EBITDA margin in the quarter was 15.4%, which we believe is quite a good level and is mostly determined by the proportion of higher added value products in sales. Then moving to 9 months results of this year in detail. The turnover that we have achieved is practically 18 million, which is a 12% year-on-year turnover growth. And this is also the historically highest 9 months turnover of the company. The next, sales split by regions in 9 months. So Baltics is 43%, Nordics 27%, the rest of EU countries 26%, and outside EU, a small share, 4% of sales, with all the regions growing on year-on-year basis. And also, as it could be observed in the chart, all 4 key regions in the longer term perspective also are showing the significant growth potential and trend. Next, 9 months sales by market sector. So the 2 main sales sectors are data network and industrial products, 43% and 27% of total sales. The other sectors are smaller, like 7 and 5% of total. So data network sector decreased on year-on-year basis for this period, while all other sectors performed well and increased on year-on-year basis. Also, if we look at the longer period trends from 2015, practically all the key segments exhibit growth trend. Then 9 months profitability results. EBITDA achieved was 3 million, which is 8% increase compared to 9 months period of 2018. And net profit result was 118,000, which is 89% down on year-on-year basis. So in this period, EBITDA margin was 16.8%, which we believe is a good performance, while net profit margin was 0.7%. Well, EBITDA margin was influenced by comparably high share of higher margin products in production, and also by introduction of IFRS 16 accounting standard regarding lease liabilities and assets, which increased asset depreciation and in turn EBITDA by approximately 400,000 euro. But nevertheless, even correcting for that, the EBITDA margin is at substantially high, at good level, as we believe. Then 12 months trailing results. So 12 months sales ending in third quarter of 2019, we have achieved 23 million euro turnover, which is 5% up compared to the TTM sales result of at the end of third quarter of 2018. EBITDA for the last 12 months amounted to 3.5 million euros, and net profit was slightly negative, 68,000 euro. EBITDA margin for this period amounted to 15%. And now I give floor to Ilmars to continue the presentation.
Yeah, hello again. Thank you, Maris. We're going to discuss and present your other activities. First of all, we'll speak about R&D, research activity. Q4 came with a quite good result of 49 million euro turnovers on sales, on R&D product sales, which is year-to-year basis 51% growth, and it amounts 88% share of Q3 sales. 9-month B2B sales reported, the same R&D B2B sales reported 1.49 million, and this is 163% growth from year before. And that is also 8.3% share of 9 months turnover of the whole group. Last time was question about split by like LightSpace and other businesses. I think this stays the same as been about the same as been previously presented. Investments during this period in Q3, HansaMatrix made 260,000 euro investments in production capacity increase and introduction of new production technologies. In 9 months, 2.3 million were invested in the same in the same in investments in production capacity. Most significant investments in Q3 was what we since with the increase of our business amounts, we are short of the size of or square meters in our production facility. So we decided to purchase nearby building that will be used as a warehouse premise. It was purchased it was finalized purchase during the Q3. Investments in associated companies. During Q3, HansaMatrix made 800,000 euro investments in LightSpace Technologies to finance development and commercialization of display technologies. In 9 months of 2019, 3.1 million been invested. Largest part of that went into some optical production new line that's installed in Ventspils LCD's fabrication site, and which will be officially opened on December 10th this year. So if anyone is willing to participate in official opening Ventspils, everyone is welcome, please. You just need to register with it. In Q3 2019, HansaMatrix has increased capital participation in LightSpace Technologies to 49.86% by paying up and carrying convertible loan conversion, subscribing to newly issued 2,730 capital shares and converting amount of roughly 1.5 million euros to the capital. During Q3, also HansaMatrix made 73,000 euros investment to associated companies in Adnes Parks. During 9 months, that amount adds up to 318,000 euros. Business development of LightSpace Technologies. During Q3, actually, company achieved three major breakthrough wins in the market, and those were that two global tier 1 OEMs, biggest names in AR/VR, chosen to build concept devices based on LightSpace multifocal headset photonics technology, and as well as one of the largest display manufacturers in the world, also tier 1 company, has chosen LightSpace technology to build new generation 3D displays. So these three we believe is major achievement in marketing of the technology. And again I'm mentioning here in August 2019, company grew EuroCDs, which is a daughter company of subsidiary of LightSpace, received an installed vacuum coating line to enable larger size multi-plane screen manufacturing. That is one of the two projects that's been realized with a state grant support. So these are the achievements. The names of these companies we cannot name. These agreements are confidential in nature. Other events. On August 8th, shareholding of Macroriga in HansaMatrix has decreased by 15% to 34 in a transaction where Macroriga repaid shareholder loan to HansaMatrix with HansaMatrix shares owned by Macroriga. A few days later, Zegai Capital, Zaļās gaismas investīcijas capital, a managed fund ZG4 has become 15.06% shareholder of HansaMatrix by purchasing those shares from HansaMatrix. As a result of this transaction, ZG4 has invested 2 million euros in HansaMatrix to enhance company growth and competitiveness. And these two transactions substantially reduce Macroriga shareholder loan to small numbers currently. So that's and events after reporting period. After Zega Fork becoming as shareholder. The company called extraordinary shareholder meeting and changed the supervisory council. The member Ivars Čirsons simultaneously elected new supervisory council member Ivars Čirsons, who represents new investor, and simultaneously Krišjāns left supervisory board position. So we have after these changes, we have all the other members of the council remain on board. So basically, we are still having three independent council members, and two are representatives of Dagnis Dremanis and Ivars Čirsons are representatives of shareholders. In October 29, extraordinary shareholder meeting approved the remuneration policy for the board of directors and supervisory council. The goal of the policy is to establish key remuneration principles facilitating the company's business strategy, long-term interests, and sustainability. And that was requested also by new European directive to have more transparent corporate governance. Also, company did the review because of the large investments in new capital assets, manufacturing tools, instruments. We reviewed its accountancy policy, and in order to straighten this, so the asset values better reflect use value and market value of these high valued manufacturing tools and instruments. We decided to change some depreciation periods of instruments to extend them, because the real use period appears are longer than substantially longer than we initially estimated, like 10 years ago when it was kind of set. So there will be some adjustments, and to ensure residual values are matched to the fair values of fixed assets. Changes are expected. This will be carried through in Q4. Changes will be expected to have positive, and it will be implied retrospectively to whole year 2019. And this is one of the measures to make more fair asset value values. So as a result of this, net profit in 2019, there will be a positive impact of net profit of 2019 already, with approximately of 300,000 euros. So that's completes presentation part. I'm having one question submitted before the webinar. So Eva, please take word. Take now.
Yes, thank you for the presentation. To start with, you are right, Ilmar, we have received one question in advance, and it goes the following. What is the expected annual growth of group revenues for the next 10 years?
Yeah, as I say, as before, we're trying to answer questions in written form. That was submitted before webinar. For that reason, I encourage everyone who has seeing the results want to ask something and receive like comments in written or more detailed format to submit them before webinar, so we are able to prepare answers. So generally, as a company, we don't do 10-year revenue planning or forecasting. I think I can repeat two guidances that been announced. Forecast and consolidated revenue for year 2020 been announced that target is 30 million euros at year 2020. EBITDA margins by year 2020 between 12 to 15%, depending on the market situation or portfolio of the high and low margin products. Forecast also, we announced 3-year forecast revenue forecast for years like ending year to 2022, achieving 40 million euros. Again, EBITDA margin forecast like being 12 to 15%. So anything, of course, feel free to look at our performance going backwards, and feel free to estimate our performance in future. I believe in 10 years this type of manufacturing still will exist. They're not expecting any revolutionary changes that would disrupt really electronic circuit manufacturing. They've been in this format like since 90s, so it's more than 30 years, and probably going to stay for a while in a market. So we won't announce currently. We will announce maybe in year next year, maybe announce another 3-year forecast, but that will be only 3 years that we are going. Yeah, thank you.
Thank you. We have received 2 additional questions online, so let's start with the first of them. What is the Q3 net profit when losses in associates is excluded?
Mari, what was, maybe you can comment, this losses in Q3 are?
No, yes, if you could give me a minute, I will.
Okay, in a minute we'll come up with a figure. You can read it into our quarterly full report. Let's wait a little bit for Mari. Maybe I go another question and I'll come back to this one.
Yes. So the second question is the following: how do you plan to improve net profit margin?
Yeah, generally, strategic plan is of course also have net profit at decent level. First of all, it's connected to depreciation levels and policies that we employ. So far, we've been extremely aggressive here and have done very early depreciation or fast depreciation, which not necessarily are reflecting real fair values of equipment. Using aggressive policy, you are ending up very quickly. For a while, you are having high depreciation, and you are coming to the point that you have written everything off and starting to the net grows faster. But probably more correct situation is that the depreciation reflects the level of usage of equipment that being invested for long term. So for that reason, we believe we have to balance these short-term and longer-term costs of equipment or depreciations. For that reason, we are reviewing now the policy. That will be one element to increase net profit. Another element, of course, is level of financial costs, and here we can. It depends on the level of lending level or debt level that we need to deploy to develop, to do long-term development or to do growth. And a third element is, of course, losses in associates, and that's kind of fully minded activities that we are doing. Of course, the plan is at some point these associates either could be, first of all, they will turn in a profitability. It's after certain maybe 2-3 years that we believe that would be, if you keep them as a group, that they will this loss will diminish with the time. Also, if there will be offers to sell this business, we of course will review them from other parties. If offers will be good, that we might take them. In that case, we will do one-off earning, substantial earning, and after that, these associates won't be in a balance sheet anymore, or be less partially. So all those effects will improve this. I would say this is temporary situation as we are here now, and we are working, of course, to have this improved or to have it better balanced between earning earning cash earning, EBITDA earning, and net earning. And now we can go back to this. Yeah, Mari, maybe you can comment now the previous question.
Yes, the question was how much would be the quarterly net profit if we exclude the losses from associates. So quarterly losses from associates in Q3 was 177,000, and then net profit would amount to approximately 150,000 euros per quarter.
For Q3, exactly.
For
Not
Q3.
per quarter, but in Q3. So yeah, so we probably have answered those questions. Eva?
Yes, you have. Thank you for that. I think we're ready to wrap up. So gentlemen, once again, thank you for the presentation. Participants, thank you for joining. As always, we have recorded the webinar, and the recording will soon be available on Nasdaq Baltic website and also on YouTube. Thank you for joining. See you in the next webinar.
Thank you. Thank you for everyone who joined in early hour, and have a beautiful day. Bye.